Hey guys, welcome back. December 22nd, Tuesday. Got a long-term Robinhood account here. This C3AI's recent IPO seems gone crazy. I think a good benchmark after an IPO is kind of waiting for the first day or two and seeing kind of where it's at. Seems like a lot of the IPOs recently have shot up and then they've kind of sold off. And if it's a good one, it'll go back up. So like on this one, you waited, let's see, I IPO'd on the 9th, here's the 10th, the 11th, yeah, I guess the 11th was a Friday, so I don't know if it would have worked on this one, but basically it bottomed back here on 15th. Probably couldn't have timed it, but after it passes the high price after the IPO, like this right here, after it passes that, I think it's usually a pretty good buy. So that would have been this day, the 18th. Once it's kind of had the IPO, it's been there for a day or two, and it's got this high, this resistance. Once it passes that resistance of IPO, or wherever it was in the last few days since IPO, seems like that's typically a pretty good benchmark to do. Of course, there's other confirmation, validation of when to get in and out and that sort of thing. But yeah, this C3 we've on our Weeple account here, this one we made them free, so we bought 13 shares at 103 and then sold 11 at 119. So then we had just the 2 free shares that we've held on to. I'm not really trying to hold shares long term in this account. It's kind of my just income producing account to feed the long term. So I mean, I'm glad I held these because it kept going. I sold out a little too early, but yeah. If AI tomorrow looks like it's kind of hit a top, I'll probably sell these last 2 shares. Kind of like I did with, what did we do? With Wish today. If you remember, we had Wish. It was also an IPO. And yeah, I sold out of these today. See right here. Oh, I wish you could kind of, pun intended. I wish you could see kind of the order details. Okay, I think maybe that's it. No. Yeah, order history. I don't know. We made like 100 or something bucks on this little swing trade. So I sold out of all those. I saw today that Wish red candle opening and closing below the 9 moving average, which was this one right here. I was watching it back here and seeing it come down on the 5-minute and on the hourly. I saw this candle and this would have made me get out of it, but I was keeping an eye on it because it kind of hit a resistance here and looked like it was kind of a top right here and kind of melting down. And then this candle opened down here, and then once it closed and it was red underneath the 9, I was like, all right. So I cut out here. Not too bad because we had it, I don't know, a few days for 100 bucks. And then, yeah, now it's just consolidating here, and this looks like a bear flag to me. So it's popping up 1% after hours, but I think it'll sell off more tomorrow. AI, I've held on to these shares, and yeah, we'll see what happens tomorrow. I'll sell out of these 2 on this account. This account's looking good though. I'm stoked. In last month, it's up $1,000 from not even really trading anything with it to just doing some very conservative swing trades with shares and a few options here and there. Let's see. Oh, I picked up Space shares for a little swing trade. I don't know if I should have or not, but Space could come back down further. It might have a little pop here for a day or two and then kind of keep going down, or this might be like, it might be finding support on this old resistance right here. So we'll see. When I look at the hourly, I'm like, okay, kind of consolidating, and it kind of had this double bottom, and then it's bullish this day, and then this day broke that high. So I think it's going to be good, but I'm not sure if it's going to run, like make a new high, like, you know, up to 40 this time. It might just be doing a little pop and then kind of come back down and bounce off the 180 moving average here, but we'll see. I put 78 shares of that, so 1900 into that one. This Tilray, I'm trying to get out of these options. No more options on this account. Long term, here we are. Kind of sold off today for us. Again, we're pretty heavy in Tesla on this account. About 25% of it's Tesla. Mostly because Tesla just run up so much since we bought it. So yeah, Tesla came down $110 today. It was down further, but it had kind of a spike towards the end of the hours or after later hours. ABNB's kind of settled down a little bit. Square came up today. Corsair sold off today. I don't know. There was like a big drop today. I don't know if there was news on that or what, but there was a big red candle during the day on Corsair. Give came up. We have a covered call on Give. And then these very shares. I thought it was starting to show kind of a support, and we'll see. I'm not sure yet with this one. Again, there's another kind of IPO test. Yeah, these candles in here, I was like, oh yeah, very go, baby, run. I saw these, and then it just kind of lost steam, and I was back down on that support. We'll see. Hopefully find support here, like this $8.90 range or $9. I'm probably not going to average into this one anymore. I've already got 120 shares. But once they add options, hopefully it's soon, I'll start doing covered calls. And yeah, Airbnb, I guess it stayed pretty flat today overall. Oh, I sold out of Airbnb on this account because this is, like I said, like more of an income, trying to just feed the long term, not trying to hold shares long term on here. Yeah, so, and I almost did on the Robinhood too. I almost sold out of my shares, but I said, no, Robinhood's long term, I'll keep those. But yeah, I saw the red candle here again, coming off of the 9 moving average, opening and closing below the 9 moving average. You know, this might kind of just be consolidation and keep going. Honestly, I'm not super convinced this is a top and reversal, but it might be. And I'd made enough on it with this one, just over $100 on a little swing trade, which I'm happy with. You know, it's crossed over the MACD. There's not much on the daily, it's too new, but it is probably pretty overbought. Well, on the 4 hour, it doesn't look bad. Yeah, I don't know. This could just be consolidating. We'll see. I mean, if it starts to run again, I could always jump back in it. Again, I'll just swing trade it with shares. But on this account, the Robinhood, I just kept it. And then what else did we do? Oh, I have these 3 rocket calls, remember, for February 19th. $26 strike, and I decided to try a calendar spread. It's the first one I've done. So basically with these calls, I own 3 of them, 3 contracts. So that gives me the right to own 300 shares by expiration date, right? So it's basically like having 300 shares. So with that option, then I can sell calls against it. So I sold this one, if you guys remember this, I think it was this 23 strike call, because I own 100 shares of Rocket. My collateral for that was my 100 shares. So basically if Rocket goes above that, I have to give up my 100 shares at that strike, 23. But since I have 3 calls, naked calls on it, I can sell calls. I can sell calls on those calls, if that makes sense. So I picked a shorter expiration, and here it is. I picked what this next Thursday, and I picked a $22.50 strike. So basically, it has to stay below $22.50, and this expires worthless. And my collateral on this is the call I bought, right? So we'll see kind of how it plays out, if this gets in the money and if I roll it, or what exactly I do if it closes out my other call and I have to pay the difference. You can kind of get into trouble on these, I think, if it just shoots up. You could always roll it, but I think I'd have to pay the difference between the call I sold and the call I bought. So it's a little confusing, and I'm not, like I said, this is the first one I've done, so I'm not super experienced with it. But I think this is called a calendar spread. So basically on the calls that I bought, and it's kind of sick if it works. I didn't know what strike price to do or what expiration to do, but the expiration on Thursday just wasn't enough time. There's no premium. So I did the next one, which was the 31st, and then 22.5. I did also because I think Rocket's kind of going to keep coming down. Yeah, it looks like on the hourly, it's maybe kind of bouncing off this a little bit, but I don't know. It might be consolidating for a run up, but I'm not too convinced. If you look on the daily, there's not really anywhere. It hit this top, couldn't break that resistance, and now it's kind of on its way back down. So like I said, I think it's going to consolidate in this range. I think it'll come down a little bit more, probably back down to this support before it goes back up. So yeah, so I mean, theoretically I could make this call free by selling calls. if you're being like honest, like this is crazy. So I have 3 of these contracts, naked calls. It costs $5.25. If I sell calls on these and just collect premium on it until this thing goes up, I'll be able to just basically make the call, the naked calls cheaper, because this is $31 of credit, and this is only one contract. So I could have done 3 of these. Would have been $90 credit. For some reason, it did also need collateral. I don't know why. Maybe that's, I don't know. Maybe if that was the difference between the strike prices. Maybe that's what the collateral was between this strike that I sold the call on and this one I bought it. Let's see, because that's 22.5, 300. No, I think, oh, maybe it was $350. That might have been the collateral I needed. So that's the difference between these strikes. Interesting. So that maybe be the max loss. I'm not sure. I was a little confused why it needed collateral for me to sell a covered call when I have a naked call I bought. But yeah, that's kind of something I'm trying on this account. Typically I wouldn't do that on this account, trying to do long term, but I had these calls and I'm like, let me just, while Rocket's just kind of hanging out, and I've heard about this and I want to try it out. I think I think it'll work. So while I'm kind of just waiting for the time to decay on this thing, I'm going to be losing value on those naked calls until it starts going up. Might as well sell some premium on them. It's kind of like just holding the shares and selling premium. So yeah, if you guys have any insight into that, let me know in the comments. Because I even did it on Options Profit Calculator, that website I use, and it wasn't very straightforward. I couldn't quite understand it. Also because the play, like, I opened it up at different times. This one has different value now than that one, and yeah, it got a little confusing. So anyways, I only did one since I'm pretty unfamiliar with it, but I'll probably end up doing the 2 more since I have 3 of these naked contracts I bought. But yep, that's about it for the long term. Yeah, our E-Trade here, didn't go over this. This is looking good. American Airlines, TSLA both came down today. I don't know how I timed that, but I just happened to time both of these like on the money and picked a good strike price, because this was 2 days ago and it was just like kind of flat. And then it sold off, and sold off again. So that's CCL. And then American, same deal. It just kind of sold off those 2 days. So kind of fortunate on these. Not huge positions. I want to leg into these maybe. So I would basically, I bought this put. If you look at the options chart. Oh no, that's actually really cool about E-Trade. You can see the actual cost of it, of where the option costs. Yeah, let's see. I don't even know. Oh, here it is. So I own this put right here, this 15 strike for the 21st of January. Once it has enough value, and it's probably already there, I think it's at 100%. What I'm gonna do is, so let me just use this one for an example. It says 107%. I don't know if that's because it's after hours and it's kind of not really given proper pricing. It might be less than that. But if we analyze this one cost me $70, and I have 5 contracts. So if we look at the options, so if I were to sell this one, let's see, it's gonna be after hours, so it might not be. Yeah, and I have 5 of them, so I could sell 2 of these and get back my full cost basis. So it's kind of like selling one of the. So I bought 5 naked puts. It's kind of like selling the naked puts to make it free. It's kind of like that, but instead I'm kind of legging into it. So I'm selling another strike. Oh, actually I went 2 strikes up. What do I do with this one? I'd be selling this call for this put. Yeah, I could do 3 of them, and I would receive $105. So then right there, boom, I'd make $20 no matter what on this play. And then my max gain on those 3 would be the difference in these strike prices, which would be, let's see, 50 cents, $150 for 3, because $50 each, and there's 3 of them, so that'd be $150. So I'd no matter what get the $20, because the difference between the cost of the 5 and then the credit I received to sell these. And then I'd have 2 naked one stills. Man, this is getting confusing, but I'm actually following it. I don't know if you guys can follow along, but I'd have 2 naked one stills, so those could have unlimited gain. And then I'd have these 2 that were capped, basically, because this would turn into a put debit spread for these 3. I'd have 3 contracts that turn into a put debit spread, and then I'd have 2 that were naked. And then I could even just do all 5 of them. And then look, so there's where it's 100%. So basically the option right now that I bought it's up like 100%, and this is almost 100% of what I paid, because I paid $70. So this is actually over 100%. So I could sell all 5, make, you know, $100 on it, and just not even look at it, not even worry about it. If it keeps going down and it gets, you know, it's going to gain value, because then this will be a put debit spread. And then my max gain would be what, out of 5 of them, 50 cents. What is that? 500? 50, that's 100, 200, 300, 250, 250. Yeah, I think my max gain would be 250 on it. After this 100 I'd already make. Yeah, so I might try that. It's kind of confusing, especially if you're not doing it with all the contracts and you have multiple contracts. But anyways, it's just making these puts that I bought and selling the one that's further out the money. And now that this one has value, that further out the money one's more expensive than this one that I bought. So I might do that with CCL and AAL. It's kind of a safe way to still get some of the gains, get your initial cost back. And if you want to do it, you could even do it to where, like you saw, you could make all your money back and just not even worry about it. Let's see if we did it up here. These should be cheaper, right? Why is that saying I received more? Oh, am I going the wrong way with it? Okay, yeah, I'm sorry. I'm going the wrong way with it. Okay, so everything I just said, but going this way, not that way. Makes sense? Because the puts that are cheaper, lower strike price, are going to be less expensive. So this is what it is. So there, this is more realistic. So I could make $20, $30 on the play. I'd sell 5 of them, and then I could still make $500 if this got to max gain, because then this would be a put debit spread. That's how it works. But if I wanted one naked, just in case it goes crazy, then I could sell 4 of them, and then I get my initial cost back. I'd have 1 naked, which could, you know, it's not unlimited, but it's basically if AL went to 0 or CCL. And then I'd have my max gain on those 4 would be 400. Aha, got it. Okay. So that's it. That's legging in. This laser call, this thing was up like 120% today, and then it kind of settled down. The Apple EV kind of news still kind of brewing around, but it's gotten kind of flat. This looks somewhat like a bull flag. I'm gonna let this thing go some more. We'll see. We'll see on that. It's kind of expensive though. Hopefully I could leg into this one too, honestly. We'll see. But that's it from you guys. Thanks so much for watching. Make sure to sub up, like up, comment down, make your money happy money, so to stick around. We're looking good coming into Christmas. Pretty flat, which is fine. This is a long-term account after all. With Tesla going down, we could do call credit spreads on it to get some of the gains going down, but I don't want to risk getting out this account. I'm going to grow this E-Trade. It's looking good. I like it. This is the month to date. We're still down on this account overall though, but we're getting back there. 228 only. And then this Weeble over here, this one's looking good too. Like I said, I wasn't really trying with this one. I just kind of was letting it sit around, but that's a good way to make money. Don't overtrade. Overtrading is a big problem. So last month we're up $1,000, but as you've seen in 3 months we've lost on it. And then yeah, so we're still trying to climb back up to 8,800. This was taking money out of it, so we've got a little ways to go, but we're getting there. Okay, see you tomorrow guys. Later.